Hello everyone and welcome back to another video. Well, they say that you've got to leave your opinions at the door, and definitely that's true when it comes to trading and of course reading technical analysis. You might come up with one of the best concepts in the world, but that doesn't necessarily mean that the concept is going to activate straight away. Last week we saw increased volatility in the markets across the world and everything started moving heavily, and this is a great time for traders and investors alike to potentially get opportunities. Have we seen the end of the bears, or are the bulls just getting started for another takeover to all-time highs? Stay tuned to find out more. Alright guys, well let's get started with the video, and straight away we'll be taking a look at a heat map of the SP 500, just to have a look at which stocks were moving heavily in the 20th of August close. Nvidia and Microsoft come to mind. Microsoft, firstly, congratulations, over $300 for the first time, a phenomenal effort. And then we have Nvidia coming in strong into what is a incredible seasonal time for it, being the August month. Very, very strong month for Nvidia, actually one of the best performers, and a massive amount of calls. So not only was the Friday session huge on calls, but we got an inkling to this being shown on the Thursday session. Nvidia calls were 209 million in strength, and it showed through hype equity, through other things, that retail was really getting behind this stock. I posted this on Twitter, and if you want to, come over and follow FX Evolution on Twitter to get these types of updates on the daily, on the close, to understand which stocks had the most amount of calls opened on it and which had the most amount of puts opened on it. An important factor when you're making decisions in the markets. So which markets were the best on the Friday session? Well, the Nasdaq came up 1%, what looks like a super powerful candle. We've got the SP 500 up 0.81. Dow Jones up 0.65, and the Russell 2000 coming in strong at a 1.69%. Now, overall, the actual week was still down for many of these stocks, and of course, the Nasdaq, while it looked like it recovered well, I think was still partially down on the week overall. But when we have a look at the sectors, this is where things get interesting. Utilities continues to outperform, guys. This is the sector that you usually don't have doing well, and it's getting close, even on up days, to rivaling the big tech and the big kind of biotech and other kind of hyper stonk kind of hyper areas. This shows us that there is still some concerns in this market. Why is it that Wall Street continue to buy utilities? Remember, when utilities outperform the S&P 500 in terms of returns over a short period, that's actually a fairly bearish indicator. It shows that there's some concern and people are moving into a sector where they feel a little bit more comfortable, a little bit more defensive from potential crashes or corrections. We've got some earnings still as well this week. Let's take a look at them now together before we get into the technical analysis and the other stuff that we want to go through in this video. And there are some big names. We've got Salesforce, Snowflake. Unfortunately, this one definitely dived and went straight through our technical level on the Friday session. That certainly did not look very good near the close. We have Peloton, that's very popular with a lot of people, and of course JD as well before the open on Monday. Make sure to join us 1 hour before the New York Open, as we'll be live streaming and talking about all of these and more through those sessions. So we know also that August and September tend to be more volatile months in the markets. We already have talked about this. For any new viewers, this is just a quick stat. August, September, specifically September, tends to be more volatile. We also know that if we take the Nasdaq over the August-September period, it tends to be also weaker. This is just statistical facts over a 20-year period. We can use these, and we don't actually make trading decisions based on them. But if we see technical analysis coming along with that idea, we can put more strength in those trades, as it means that they're not only working with a seasonal or statistical fact, but they're also showing it with the real price action of what Wall Street's doing. So firstly, congratulations for the dollar index. Look at this thing. It's actually created the double bottom, and this now has a bullish bias on it from a technical analysis standpoint. We've got a closure above the previous high. We've got a closure above, of course, this rejection candle over here. And now for day traders, for swing traders, for everybody, you start to look for swing-based methods up until the next resistances as dollar index ends up filling the gap. Now, could the dollar index turn around, come back down and retest from the top down to here? Absolutely. So it's all about understanding that currently, from a bullish perspective, this looks like a double bottom pattern, and you're going to get biased towards the long side and look for swings. And that's the important thing. Countering versus going with the trend. And it's the same thing in the stock market. When the trend turns down, you can start shorting, but you've got to understand that the stock market is a bullish tool. It goes up most of the time over time. The dollar index has no real fair value. It's obviously what depends on the monetary policy and what the Fed's doing, etc., etc. So when it breaks through and it closes above a key level, you start to get a bullish bias and you start to look for scalps. You start to look for day trades. This is the important thing. It all starts at the top, and then you get that bias based on the price action itself. And that gives you a very strong commitment when it comes to trading and investing. Let's move over here to the VIX, Volatility Index. Very disappointing for the bears. They certainly didn't win this one. I was looking for a 22 plus close on the VIX. And if that occurred, I believe the actual bears had full control of the market. It did not happen, and we saw a big movement back up in terms of a buy the dip kind of scenario on the Nasdaq, S&P, and everything as we discussed. VIX is still high at 18.55, but that is not high enough to create a bear bust where the bears get through and smash through those supports and move further down with the markets. So we'll continue to watch this indicator through the week, but it's just nothing really at this stage. We'll move over to gold. Gold consolidating at a perfect level. Previous resistances and supports, role reversals become resistance again. We've got a long leg doji, number one. We've got another long leg doji, number two on the daily. Then we get a small sell candle. It does not close underneath the long leg doji, therefore not triggering anything. And we get a weakness candle coming in on the Friday session. Nothing going on with gold, but definitely trap this one up, guys, because it could be explosive whichever way it moves. You can see it's now coiling. It's coiling at a key level. And for anyone that was in the trade towards the long side, you hopefully now, if you've been watching this channel for a while, you can see why this is such a great zone for take profit areas. What a phenomenal area, and we'll continue to watch gold and silver throughout the week. Another great trade that we definitely highlighted last week was the closure of oil. This is probably the best trade that we saw. It's not only got the right sequences into it, being the lower peaks coming through, especially this one with the last bounce, but we see that clear close below. We see a follow through candle, another follow through candle, and we've hit the first level of take profit. So that's going to be around that 62 level. Next level, 60 bucks. Probably will be a spike underneath there. You'd hope it starts to consolidate around this $60 or $62 for oil's sake. But yeah, key levels, great trade. You can see how fast the momentum is. In 2 days, you're out with multiple dollars coming out of oil. That's a great percentage. And I want to congratulate all oil traders recently, because if you've been on the short side of this, and of course the long side that we followed for many months over here, it's just traded so technically. I want to show new viewers how good this has been. Look at this, guys. I mean, 75, 76, we spoke about it. We spoke about this level. We got the retest back down. We spoke about this level and how we liked taking profit there initially, and then we saw that bounce through. It just trades so technically beautifully at this stage, and it's been going on now ever really since the crisis period stopped. About June, I guess that period when we started to get the recovery in oil, it got good. And then it got really good after that kind of November area. So much great trading, swing based on the smaller timeframes in here. Let's move over to the stock market now and talk about Tesla. So Tesla closed at the perfect, or very close to the perfect honey hole for Wall Street to make maximum profit. There was a massive amount of options expiring on the Friday session. And I think with Tesla traders, what you're really looking at is you're looking for this trend line to hold up, and of course, that people continue to buy into it. But what you either want is there's just so many calls being opened that it stacks through and Wall Street have to start covering up, or you need people people to go basically bearish on it. You want heaps and heaps and heaps of puts being opened, because Wall Street tends to be contrarian to that. Long leg doji on the Friday closure. This means that if you get above that kind of 697 zone, again, 727 becomes the next resistance for day traders. And then we've got that 770 opening up. And for the bear side, if you get underneath here, straight into the trend line, and I will not like that at all, because that will mean a peak, a trough, and a lower peak, and a lower trough if it got through the 650. So be very careful at 650 this week, guys. I'm not sure that's a buy the dip scenario. If the market comes down here again, and you get a closure underneath here, it'll go through our trend line, it'll go underneath the last trough, and this will make Michael Burry very happy, because all of a sudden Tesla will be getting actually quite weak. And I know a lot of you will say, but Tom, human robots are coming. The Terminator is coming, guys. Yes, I understand. It's really exciting. That stuff's cool. but it is quite far away. So the stock market only seems to care, well, it cares about far away, but it cares about acquisition. It cares about how many users are doing something, and it really cares, and especially Tesla, it's starting to say, hey, we want to see profits. We want to see actual cars being manufactured. We want the now more than the future. And that's why the price is kind of sitting a little bit here. It's trying to figure out what is the real fair value in the future. Be careful here. Long leg doji, we know that means indecision. And when we go over to the weekly for Tesla traders, you'll notice there was a nice rejection up, which is great, but you need that thing above 700, guys. And once it does, I believe things are looking so much better for the Tesla stock and Tesla traders. Another thing that we want to be checking out is how many traders are actually buying calls, selling puts, etc., buying puts. And last week, we had all over the place. Every day it was changing. At one point, there was a huge amount of calls, then Wall Street dumped a huge amount of puts. There were puts all over 700 as the favorite strike at the start, and you'll notice this is where the expiry was. Why does it expire around 680? Because look at the positive calls that were there. Huge amounts of calls, none of them in the money, Only these guys made a few dollars, and I bet you they didn't make that much. So it really finished right exactly where you think it was. This week opens up a big kahuna amount of positive calls. This is, remember, the difference between the calls opened and the puts opened. So we've got a 16.45 million strike reading at 680. That's a lot of retail traders thinking that Tesla's going up. And I believe this was brought on by the AI day. If I was Wall Street, I'd be attacking this purely because there's so much cash there to be had. And that's why I really caution people about Tesla this week. You need this thing above 700. Does that make sense? Once you get through 700, you're starting to say, okay, you know what? We're putting so much pressure on the calls. It's an AMD style scenario. It's a Moderna style scenario. Always try thinking about these types of things. 16.45 million calls are literally expiring at that strike. Wow. And that's the net difference as well. There's probably even more calls there when you take into the puts into consideration. We'll move over now to IWM, the Russell 2000. Big rally here, long leg doji into bullish candle. I guess that is bullish when you think about it. This is the type of thing that makes the market look like it's all good, all green. I don't really like the IWM. I'm using it more as a scenario of if it closes above or below these levels, we're looking at bearish or bullish movement that's going to be sustained for quite some time. These are the smaller cap companies. Closure underneath 208 will be negative for it. So just keep watching that through the next couple of weeks. I think that's important. We'll move over to the QQQ. So this was certainly disappointing for the bears. No closure underneath the 360. 360 was definitely a massive flaw. This was basically where we had the 50 exponential moving average. We had a huge amount of bulls and bears fighting it out, and you could see who won by the end of the week. It certainly was not the bears. Big pull up, and this is now 1, 2, 3 wicks pulled up. So if it gets through this little peak, the previous highs here, which it's pretty close to now, of course, only about, $2 difference, you would think that continues some nice bullish momentum here for the Nasdaq. If it ever closes underneath 360, let's just say we had a candle that went down and got underneath 360, that is so negative, guys. That will be, I think that is really, really, really negative. So let's try to understand actually what happened through the sessions. We'll go to the daily. We'll get a bit of an understanding. So what happened was we closed below the 20. We found some issues there. We closed below the 20. In the fake market futures, we hit the 50, which is the first level of course, turnaround. It has been before. It rallied incredibly quickly. And then in the Friday session, we actually got a break above a very key zone, and that led to some great trades. So let's actually have a look at these trades. I want everybody to understand the day trading mindset as opposed to just the swing trading mindset. So the first one we targeted was over here. We saw the trough, the peak, the higher trough, the higher peak, especially here, the sequence of fully complete, and you're looking at some very nice strength. A lot of people got that, and congratulations to you guys. Then on the Friday session, we were talking about the 15,000 zone, and you'll notice here, this zone was broken through. We also had a trend line that was declining here that we talked about in the daily video. And you know what I think about market repair, guys. If you have a downward sloping trend line and then it closes above, what happens? You start to see a sequence of buying. So there's some great day trades here. From this point here to this point here is a great day trade. And I think profits should usually be taken around that 15K from a technical perspective. Then when it breaks through and closes above here on a smaller time frame, a lot of scalpers will come in and take it for the next level. Where's the most logical step for it to go to? Probably the 15.1, previous little bit of support over here. Maybe 15.80 would have been even a great little take profit. And then it turns around through the middle of the session, comes back down, hits around that 15K, and of course bounces again. So that's a role reversal where previous resistance becomes support. So there has been some great day trading within trades, and a lot of them actually are coming in prior to the market. So this closure here, phenomenal trade. I really like that one. And of course, the movement through here could have been scaled in. You might have only got half an order, and then you could have always loaded a little bit more up or put another order in near the end of the day around this zone. So there are good trades within trades. This is why you've got to be kind of nimble right now. The market is in a neutralized zone. It hasn't got clear direction either way. Yes, it's positive overall, but especially the Nasdaq. If you now go through the last couple of weeks, you'll notice that it really doesn't know what it wants to do. It's gone up, it's gone down, it's gone up, and effectively, what is it? It's like a little channel. You've got now your one touch, two touches to both sides. That creates a channel length as far as I define it. And then we look for a break of either side to show us the true direction of how the market is going to go. Let's move over to the S&P 500. Very similar thing. Big rejection here coming off the 50 exponential. Again, no surprise. We highlighted how important this zone's been. And unfortunately, it is for the bears again. It is a massive buy the dip and it's come through. We don't have incredible strength here in the market, but we do have an increased amount of volume that came through the sessions. We're looking for breakouts above. I probably prefer the Nasdaq still to be looking for either side. That's been slowing down here. And remember, the best performing index year to date is actually the S&P 500, not the Nasdaq. The S&P 500 sitting at around a 17.5%. The Nasdaq sitting at around 13%. So this is the market that might be a little bit cooked in some ways in terms of overpriced when compared to the Nasdaq and its movement through that neutralized zone. When we take a look at the SPY heat flow map, you'll notice that there are quite a large amount of positions that are being opened. Net positive puts being open around 435. This is a big position here from Wall Street going in for September. And I think a lot of people are starting to play that September level. Who will win? We'll have to see how these options end up eventuating closer in. Remember, it's what Wall Street are doing right now that's important to note. They've gone negative. But what are the retail traders going to do? Are they going to push this strike to being positive, etc.? How many retail traders? Because they usually only trade 1 to 2 weeks ahead. So when we're talking about September, it's too far for many retail traders to be in. So this will be something that we continue to watch through the next couple of weeks. Where are the SPY puts and calls showing up? Let's move over to BTC. Strong trades here. Well done to everybody that got that double bottom play through. I think that was an exceptional trade. We discussed it here on the channel. The first take profit was taken. Consolidation, breakthrough, just about hit 50K recently and then came back down. If we're taking a look at the overall movements here on the weekly, you can see it just goes from strength to strength to strength. I don't know if we're seeing that much weakness just yet in the markets. I guess I would be hesitant around the 50K. This is the type of area that I expect it to pull down, consolidate for a while, and if it coils like this, when it goes back up, I wouldn't take profit at 50 anymore because from technical level, a coil below a key zone, when it goes through, it smashes it. So that'll be something that we're continuously looking at as well. Other things that you want to check this week is just remember this week always, like every week, has news in it. We've got Fed Chair Powell speaking on Friday, August the 27th, and then the Jackson Hole Symposium is coming through. We've got day 2 here on the Friday, and Thursday, I believe, is when it starts. So these 2 events usually create a little bit of volatility. Again, what the Fed is doing is the most important thing in the markets right now. And we just wanted to say, we wish you all the best in the next week of trade. It's going to be a very, very interesting time as we enter almost the beginning of September, the time that sold off last year. Thanks very much, guys. Subscribe if you enjoy the videos. Hit that thumbs up button. And what do you guys think is going to happen this week? Bull or bear? Put it down below in the comments. Let us know what the community thinks, as it's always really interesting. You guys will split on Friday. The Bulls won. Will the Bears get control this week? Stay tuned.